Well, good morning and welcome to Business Morning right here on Channels Television. Well, it's the midweek trade, and today we're following three powerful stories about money, markets, and where Nigeria is really headed. First, investing in Nigeria in an economy still shaped by reforms, high interest rates, and a cautious but curious global investor community. Where's smart money going, in 2026? That's the question. And how do you invest when uncertainty is still part of the equation? So today, from markets to movies, from capital to culture, we're connecting the dots between where the money is and where it's going and what it means for you. This is Business Morning. Let's get into it now. Starting with oil prices, we're seeing prices ease today after a 4-day rally has renewed, Venezuelan exports and rising U.S. crude inventories. That's weighed on market, even as, lingering concerns over potential supply disruptions from civil unrest in Iran. That's continued to influence sentiment there. So, from about 4 days of, gains, now we're seeing a pullback right there in the oil market. But we still see Brent still holding up over $60, and WTI trying to stay right there, smack on at $60 per barrel. Let's get a check now on how the markets performed yesterday right here. That's the local boss, and definitely we see it's another positive outing. It's still bullish momentum. That's for the Tuesday trade, with strong buying in key sectors, pushing the total market capitalization up by 1.66 trillion to 106.18 trillion naira. The offshore index gained 1.59%, a big move up, closing at 165,837 points as investor, optimism that drove the market higher, while trading volume, that dipped slightly, turnover that surged a big 75%, showing heavy activity in higher price stocks and highlighting a market increasingly dominated by quality-driven participation. So not a green close. We'll see if that happens again for the midweek trade today. All right, let's look at forecasts now. The World Bank is projecting Nigeria's economy will grow by 4.4% in 2026, reflecting a steady recovery supported by domestic demand and improving exports. Across low-income countries, growth is expected to average about 5.6%. That's 2026 to 2027, as easing inflation, stronger domestic consumption, that's supposed to boost activity, according to the latest global economic forecast there, reports coming from the World Bank. Despite these gains, the pace remains insufficient to close the income gap with advanced economies, with per capita income in developed countries projected to rise only by 3%. Next year. Globally, inflation is set to ease to about 2.6% in 2026, benefiting from, softer labor markets and, lower energy prices. Meanwhile, overall global economic growth is expected to slow to 2.6% in 2026 before a modest rebound, in 2027, as high debt levels and weak job creation, that's continuing to weigh on the recovery. But that's a picture right there for Nigeria as a forecast. 4.4% GDP growth 2026 to 2027 coming from the World Bank. All right, let's head to other matters now. The Minister of Solid Minerals Development, Mr. Dele Alake, has extended a hand of partnership to the Kingdom of Saudi Arabia, as well as investors in the country, to establish processing factories in Nigeria. He made the call during a meeting with the country's Minister of Industry and Mineral Resources, Mr. Bandar bin Ibrahim, in Riyadh, Saudi Arabia. According to Mr. Alake, under President Tinubu's administration, about 3 Chinese companies have set up processing factories, and there's room for more foreign investments in the sector, highlighting investment areas to include lithium, gold, iron ore, among others. Mr. Alake also reeled out successes achieved, especially the federal government's value addition policy, which he says has yielded results as a major contributor to the growth of the sector. On his part, the Saudi minister believes the 2 countries will identify areas of partnership that will transcend into meaning and mutual value addition. The 2 ministers are expected to sign an MOU to formalize this partnership. Meanwhile, Nigeria is set to formally regulate its artificial intelligence sector as lawmakers move to pass the National Digital Economy and E-Governance Bill. NIDA's Director General, Kashifu Abdullahi, says the legislation will make Nigeria one of the first African countries with a nationwide AI regulatory framework, with approval expected by the end of March. Currently, Nigeria ranks 72nd out of 188 countries in the 2025 Government AI Readiness Index, placing it among the top performers in sub-Saharan Africa. I see the Minister of Industry, Trade and Investment, Jumoke Oduwole, says the Comprehensive Economic Partnership Agreement signed with the United Arab Emirates opens door for Nigerian businesses into the regional hub of the Middle East. Speaking after the signing ceremony, the minister says Nigerian exporters will have over 7,000 product lines that will enter the UAE market duty-free. Take a listen.
Nigerian exporters will have over 7,000 product lines, from agricultural products to pharmaceuticals, that will enter the UAE market duty-free. So that's a big one for our non-oil exports under the Renewed Hope agenda. Also, Nigeria will be diversifying and accelerating exports in various sectors. Also, Nigeria will be welcoming investors from the UAE in critical sectors such as infrastructure, financial services. These are areas where we're prioritizing industrialization, we're prioritizing services where we're competitive. This agreement has been a long time coming. We've negotiated for about 11 months, very tough negotiation, but both sides are delighted that we have a good deal. This particular agreement will allow Nigerian businesses access into that regional hub of the Middle East, and it's a gateway to the rest of the world. It's an area where Nigerians are competitive in services. Nigerians will have up to 3 months to go into the UAE market in a 12-month period. Nigerians will have the opportunity, managers, business owners, to set up offices in the UAE. We're also improving transport and logistics. We know that Emirates will also be expanding into Abuja again by Q1 of this year. So it's a lot of things that we have in store for Nigerian businesses. What we want to say is that we want Nigerian businesses to take full advantage of this agreement that has been negotiated for them.
All right, as Nigeria's economy evolves, private equity is playing an increasingly important role in driving growth. Today, we explore the state of private equity in Nigeria and what to expect for 2026, from deal flows and investor appetite to the sectors attracting the most interest, and ask whether private equity is becoming the main source of capital for businesses in the country. Joining me for this conversation, we have Madam Tokunbo Ishmael. She's the MD, Alithia Capital. Thank you so much for joining us this morning. Great to have you.
Good morning. Thank you for having me.
Fantastic. So let's look at the top destinations now for private equity, on the continent. Word on the street is Nigeria is still that top destination. Is that still the case at this point?
Absolutely. For depth and breadth, Nigeria remains the anchor market in West Africa, mainly because it has the largest pool of scaled private companies, the most developed services, the ecosystem, banks, advisors, lawyers, and the biggest domestic demand base. However, that being said, even though it's a top destination, what we're seeing in 2026 is that there's competition from smaller West African markets that can offer currency stability and sometimes a clearer exit visibility. So Nigeria is still number one, but the opportunity set with other peers is expanding, and we need to keep going and look at the selectivity of the businesses that we invest in 2026.
Right, and talking about currency stability, we did see, Ghana, they did have, some fantastic macro stories in 2025. That they have the best performing currency, that's the CD for 2025. So what do you think can, keep Nigeria ahead of its neighbors at this point? And it wasn't bad for the Naira, in 2025. We had stability. Is that enough to keep Nigeria ahead of its neighbors when it comes to PE?
Well, stability is a great thing because in the past we've had some major shifts that have affected a lot of investments. So stability is good. And what you see with investors now, as we are selective, we're looking at companies that can provide some of that FX resilience, quick cash conversion, and good governance. So, and we're seeing that, especially as we look at companies that provide export opportunities and import substitution. So on a macro level, we're seeing good numbers. You just spoke about great growth. The CBN has made some great strides with some pronouncements. And even earlier this year, the FT said a number of African countries, or Africa as a continent, will outstrip growth in Asian countries, and Nigeria is a big part of that, as we've just mentioned.
All right, are there specific, sectors still driving appeal for Nigeria at this point? Or is it just, fintech as usual?
Well, financial services is a big part of what's driving deal flow. But that being said, so you've got the fintech, you've got the technology, tech enabling across the real economy. So, for example, at Alake Capital, we're one of the early investors in Paga, which has shown stability over the years as a financial infrastructure play, and is providing financial rails not just to retail customers, but now to other companies, so enabling them to receive payments, manage their cash flows, inventories, etc. We're also seeing embedded finance. We've invested in embedded finance in companies like Max. We're also seeing Omni Retail, which is providing SME enablement for retailers and connecting private equity to the real economy. So the real economy has a lot of juice in it, and what it needs is that enablement. It needs those financial rails. And we have companies like Tomato Juice, who are also in the Alethea Capital portfolio, who are really connecting the farmers to export opportunities, and we're looking at agribusiness as well and manufacturing as a key part of that.
So how has the private equity landscape, changed recently? Are we seeing, bigger deals or smaller deals, or just a shift in the types of companies investors are interested in now?
Yeah, so like I said, there's more selectivity. But what you're also seeing is a kind of barbell opportunity set, where you're seeing smaller deals getting more attractive. Most of those smaller deals are within the tech enabling space or the real economy, where you're seeing some formalization and growth. We still need to eat, so agribusiness, like I mentioned before. But what you're also seeing is that the larger companies are seeing more attraction from capital. And so we still have that thin bar in the middle for the missing middle. So you've got large companies attracting capital, but you're seeing a lot more interest in these smaller, nimble, innovative companies across the sectors that I've mentioned.
Right, and definitely, I'm sure there are businesses out there looking for investment right now, and they believe they have that product or service that can make life better for Africans and Nigerians. As an investor, at this point, what are you looking for in that kind of business in 2026?
So again, we're looking for SME platforms that enable SMEs to grow, have better resilience. We're looking at agribusiness and manufacturing. We're looking at those companies that have export opportunities, that can take their footprint and take advantage of the Africa Free Trade Continental Agreement, but also provide that foreign currency resilience, as I mentioned earlier. And we're looking for companies that are looking for more than just money, right? We're looking for companies that want that patient capital, that will stick with them, will partner with them, and unlike the short tenors that you're seeing coming out of banks, we're partnering with companies to grow them. We just heard the Minister of Industry talk about opportunities for export now new into the Middle East. And we're partnering with companies that are making us proud with Nigerian products that are being exported, not just apparel and creative, but also food and consumer goods. And that's happening already across West Africa and beyond. And now it's great that we have these kind of agreements and policies that enable these companies that can grow. So it's important that we have companies that have an opportunity set, that have a latent market demand that they can tap into, that have the resilience and the governance to boot and willingness to partner for long term.
Right, and we also like to track, what's happening when it comes to, local investors and, foreign investors at this point. When it comes to, local versus foreign PE funds, who's taking the lead right now?
So we're still seeing foreign capital come in overwhelmingly. But what we're seeing is that is obviously going to the larger end of the scale when I mentioned the barbell, the larger companies. But we're also interestingly seeing more activity domestically as growth opportunities arise and people look for new investment opportunities. We're seeing domestic capital come to the table. It's still overwhelmingly small compared to what we have across the whole set. So in Africa, there are about $3 billion of deals over the last 6 years. About 70% of that was Nigerian companies. And I can tell you that overwhelmingly more than 70% of that capital came from foreign investors. So we still need to see more activity from the domestic investors, the pension funds, the other asset allocators, the development institutions that we've seen grown over the years in Nigeria. And that's happening. We just need to see more of that at pace.
All right, so the foreign PE still leading at this point, but what's motivating their activity? Is it opportunity, risk appetite, or something else?
Well, it's not altruistic, so let's start from that point, right? They do see the opportunity. Like I mentioned, even the Financial Times is talking about how growth is going to outstrip in Asian economies, how growth in Africa is going to outstrip Asian economies. So people see that opportunity. People see we have the population dividend, the youth dividend, which provides a latent demand. That consumer story is still strong. People still need to eat. People still want to feed, clothe themselves. So that is still happening. We have a lot of that. And but what will not be missed is the fact that there are development finance institutions that are overwhelmingly providing capital, and they do have an agenda around impact-driven opportunities, where you're not just making financial returns, but you're creating jobs. So you're making it possible for ordinary folk to have access to essential services like finance, education, health, key areas of the economy. You're addressing food insecurity. So these are real opportune sectors that are attracting foreign investors for the financial returns for sure, and for the ability to make a change. And we all know the Sustainable Development Goals, that's a key area. Another key factor is the energy transition, because we know globally all the talk around net zero agendas, and Africa is seen as a place where, given our breadth, our population size, our economies, there's significant opportunity to drive energy transition. And for us in Africa, that is not just about net zero, it's about improving lives and livelihoods. Without some of our companies, our manufacturing companies, Sultry is a cassava processing company in Iseyin. It's a real economy company that's right there with the farmers, turning that into cassava derivatives like sorbitol, cassava flour, and exporting. We were able to cut costs in Sultry by over 50% by driving on energy transition. We need to see that happen in more companies across the real economy. Digitization. This is one of the last frontier markets. We need the digital infrastructure. So there are opportunities to invest to drive on that, which is then going to drive the opportunities for the innovative tech companies. And when I spoke about the youth dividend, that's where we're seeing more activity from the youth. So it is opportunity-led, it is demand-driven, and it is about how can we achieve improved lives and livelihoods for ordinary folk in Africa.
All right, so, definitely when it comes to borrowing costs, that is, stayed elevated in most parts at this point. Even right here in Nigeria, we had just one, rate cut in 2025. We're seeing forecasts for maybe a 400 basis points cut, maybe in 2026 at this point. Do you think, businesses can, somehow, maybe there's some potential there, they could rely on the banks for borrowing, in 2026?
Well, there's some businesses that can, maybe when, again, I mentioned the barbell, those companies, the larger companies, maybe that have significant collateral to put down towards their loan requirements. They're those companies that are looking for short-term working capital, and banks will continue to be the largest provider of working capital for those types of companies. At the other end of the scale, there's still a paucity of funds that are flowing to small and growing businesses, which are challenged to secure funding from banks. And also many of those companies, those innovative companies, are really looking for patient capital. I spoke about our fintech investments in financial infrastructure through Paga. That was patient capital. Omni Retail is providing working capital almost as a substitute to banks, to many SMEs and retailers, real economy businesses. So we're looking at different solutions that are coming in to substitute where companies, growing businesses, growth companies require more patient capital, and where they certainly don't have the type of collateral that banks are requiring.
All right, I guess at this point we'll keep tracking to see how private equity continues to fund most of these businesses, in 2026 and beyond. Thank you so much, Madam Tokunbo Ishmael. She's the MD, Alithia Capital. Thank you so much for helping us paint the picture of what to expect this year.
Thank you.
Well, I'll take a break now. When we come back, we're still looking at investment flows at this point. Where investors going to make money in 2026? That's in a moment. Just stay with us. Well, as we go deeper into 2026, investors are keeping a close eye on inflation, interest rates. We're expecting the numbers for December in Nigeria and ongoing FX reform. Today, we'll explore the country's investment climate from promising sectors like banking, agriculture, tech, and energy to the risk that could shape markets at this point. Joining me for this conversation, Mr. Ike Chioke is a Group Managing Director, AfriInvest, West Africa. Join me right here in the studio. It's great to have you, sir.
Thank you.
Last time I saw you was in 2025.
Well, that was a few days ago.
Not too far away.
Last year now.
Yeah.
Okay.
Even though it's a new year. Happy New Year.
Happy New Year to you.
And yeah, it was fantastic. For the equities market.
It was brilliant.
At this point, everybody made money. Maybe not.
50+% up for the entire market. We're over 100 trillion naira for the first time. So many companies, they sort of north of 50%, 75%, 80%. A few I know did 300%.
I even saw a 1,000.
Yeah, it's been spectacular for the market.
Right.
And it's really a sort of positive news because we've been echoing that the market is back and it's different from how it used to be because there's more transparency, there's more systems that ensure efficiency. But now people can see for themselves that the reality is in, yes.
Right, and this coming from a 2025 where we had stable FX markets.
Correct.
Inflation
declining.
Declining about 14
yes.
percent, and now we're in 2026, and it seems that energy is still flowing into the equities market. We're still seeing big gains. We had a Santa rally. We're still seeing gains even now.
Okay.
So it seems this continues.
Well,
or maybe not.
I think, well, you have to contextualize it from the point of view of the overall economy itself. We saw growth at 3.9% GDP growth last year. We are projecting, after Invest Research, 4.3% this year. That is on the back of what we see as sort of constructive, positive momentum. The central bank has done a great job instead of stabilizing the FX environment. External reserves now $45.6 billion. The sort of spread between the parallel market and the official market is less than 1% because of this EFM system, electronic foreign exchange matching system, that allows buyers and sellers to see themselves. It's much more efficient, and there's no way opportunity for speculators. So that's helpful. Although NPR is still high, it's come down to 27%. We think the environment is ripe for further rate cuts. We've seen a more dovish stance from other central banks, and we hope Nigeria would toe that line and perhaps bring rates down another 200-300 basis points.
Even though President Trump is not happy with Powell, the Fed chair.
Let's put Trump aside. We'll talk about Trump in terms of the risk factors.
Right.
From an interest rate environment, we can see rates are easing, and we think that sort of 16 or sort of 19 to 22% yield environment you saw last year will come to all under 20%, so perhaps something like 16 to 19% this year. So that's all positive. So if the CBN were to sort of lower rates, that will also be signaling for the banks to reduce the cost of borrowing, allowing manufacturers and businesses to borrow more efficiently, create more jobs, expand their business. So that augurs well. Ultimately, it flows back to greater earnings in the market, lower PE multiples, better price, better value for investors. So this is all very positive.
Yeah. It's a very rosy picture.
The indices are there.
Right.
But obviously,
the risks are there.
Yes, because when you look at it sort of from a 35,000 feet level, it all looks positive. You need to come closer and then begin to see which ones are really the right places to be and what are the potential risks that investors might face.
Right. So looking at what's playing out so far, geopolitics again is shaping global economies at this point. We're seeing gold, the safe havens, hitting new highs at this point. Do you get nervous, at this point when you see, what's playing out with the safe haven market and geopolitics with Iran, Venezuela, and the U.S.? You get nervous?
Very concerned because of the issues around geopolitics. And I think Nigeria just needs to be much more vigilant, particularly from a diplomatic point of view. First, to make sure that our views are communicated to the big countries, America, the European bloc, China, Russia, but also to make sure to avoid us becoming a potential scapegoat. Because when elephants are fighting, you can just get trampled, and they call it collateral damage. And so some of these tariff issues, you remember how, Trump putting up tariffs here and there, left, right, and center, suddenly you find yourself cut out of a nice window where you could export to the U.S. market. But geopolitics is a real big issue for us. And of course, this year is a pre-election year, so that's also another big issue, because with all the electioneering going on, governance suffers. And the time to decision making, which in Nigeria is very slow normally, becomes abandoned. So good things that could have made the economy tick along, move faster, could suffer because of politics. And then insecurity. is definitely there, and it continues to wane strong. You talk about gold prices hitting new highs, but gold is coming from Zamfara, and that creates more insecurity for us there because of all the banditry going on. If they feel they can sell more ounces of gold at much higher prices, it could increase banditry. But even the fact that Trump decided to help us fight insecurity is also a problem, because if you kind of paint the picture as a genocidal war, fighting for Christians, it could then create an unintended consequence of people coming here to make Nigeria a theater of war because they want to fight America. And so some of these things we need to be extremely cautious, and that's why I think on a diplomatic level, Nigeria needs to be much more vigilant and make sure the right people are talking to all those people.
It's quite interesting, seeing some, other African countries actually profiting, from, these all-time highs, when it comes to some of the metals. We've seen that with copper, to some African countries, making a good buck.
Well, it's good. Yeah, if you're a resource-rich country, this is perhaps your time.
Right.
Because
but it's funny how we're still concentrating on oil.
Yes, that's always been the problem. I think that even if I were to look at Nigeria from a quality of earnings and sustainability point of view, even Nollywood and the music industry and our film industry can actually earn much more than oil on a sustainable basis that creates employment. But it's just that we're not paying enough attention. Of course, we are seeing and noticing some of the big names that are making a lot of money and some of the big producers that are also making money, but we could actually create a real machine around that. Tourism is one area that we totally neglect. I was just with some gentleman from Egypt, and he's just telling me the sort of investments Egypt has done in the tourism industry. We are nowhere close. Then, technology. With all the youth we have in the country, the ability to do outsource employment where we have our youth here working for overseas companies, huge opportunity. But we need to build infrastructure. We need to bring fiber optic. We need to bring down, make sure the quality of education is higher, improve our healthcare, because all those impact the quality of human capital we have to deliver. So we're delivering quality, and we can get more meaningful employment at a high premium. But alas, oil is the easiest one,
right? Because
oil allows some people to, do other things,
All right, let's go back to following the money right there in the market. Definitely, I guess there's still a lot of optimism, for the local boss, in 2026. But what trading trends did you see, like, interesting trading trends? I know most people now, we see them on the apps.
Yes.
They're trading Nigerian stocks.
No, that's true. I mean, AfroInvest has one of the best apps in the market, AfroInvestor, for trading. But better yet, we've launched the Plutus Neo, which is our investment and savings app. What we're doing with Plutus Neo is to make it a platform that aggregates both our securities trading, our asset management, our investment research. Because AfroInvest has always been a research-driven firm, making sure that anything we put out there is supported by fundamental research. And so we believe that the best way to go is to have a platform through which our customers can see everything in a single interface, which is what Plutus Neo is about. So today, with this app, Plutus Neo by AfroInvest, you can actually go in and click to trade Nigerian stocks, and that'll take you to our AfroInvestor. You can click to trade US stocks. It'll take you to another window, which is driven by Drive Wealth, our partner in America. You can trade all the US stocks. You can put your money there and forget it. You think it's like a current account. It's actually an asset management account, and it pays you double digits in terms of savings. It's like your current account paying you double digits. Now you can lock it for a period of time, and it'll give you a better return. We're now working towards introducing a partnership with a banking app to allow you to make payments and also lending, and that is soon to come. But Plutus Neo is a new kid on the block. It used to be called Optimus by AfroInvest, but we renamed it because we are positioning it for greatness.
Right. So,
greater things.
Do you think, we didn't have trading apps, before now? couple of years ago. You still needed a stockbroker, you know, calls and all of that, transferring money, you know, to help you buy a stock.
Yeah.
And now we have T+2.
Settlement.
So is this attracting more use?
It's actually attracting
to the
much
market?
more. Absolutely. From our side, we've seen our customer base kind of just jump incrementally. Once upon a time when we used to have our customers call us to execute their trades, we're dealing with, you know, less than 20,000 customers on average every week. Today, we are trying to manage over 200,000 customers trading online, and that is growing. We're onboarding about 5,000 to 10,000 customers a week because of people seeing the opportunity of online trading. Remember, the issues that Nigeria suffered back in the time when the market collapsed were things like transparency. I bought some shares. I need to see instantly that it's settled in my account. Things like access to market. The market has gone up. I want to sell, and there's no restriction. In those days, they tell you, oh, we need to dematerialize this or that. No, it's all digital. It's all connected to your app, which is connected to both the NGX and connected to the CSCS system. And as soon as you execute an order T+2, you're done. And it sells the shares and settles the cash in your system, and you can see it. Immediately, you can decide what you want to do. You can buy more, or you can transfer back to your account and spend it.
Because, you know,
so that transparency
when you go on
helpful.
social media, you see some of these gains, you know, flying around. You know, companies are gaining, you know, 1,300%, 400%, 500%. You know, some people will see that and say, you know what, I'm going in there. But going into that app without understanding, you know, how these markets really work. What's your advice to that kind of person now? You download the app, oh, fine, I want to start trading. I just start trading blindly. I'm just buying anything.
Well, go for the apps with the houses you know that you can trust, particularly those who have the research to support you. So you can click on the stock and see the price history. You can do, for example, on AfriInvestor, which is our own app, you can see 1 month performance, 3 months, 6 months, 1 year, you know. But there are some fundamental things that we also offer, and that is coming through our research department called AfriInvest Consulting, where you kind of see the basics of how you understand the market. It's not just simply price, because you could see a stock at 10 naira and I see one at 20 naira, and I decide to buy more of 20, and you're thinking, but the 10 naira is cheaper. No. The basic fundamental way to look at it is price to earnings. So if my 20 naira stock, you know, has 10 naira earnings, you know, so the price divided by 10 is 2. So the P multiple is 2. But your 10 naira stock might have only 1 naira earnings. So the price to earnings multiple is 10. So that means it's going to take you 10 years. If it's 1 naira is getting per share, it's going to take you 10 years to get back that 10 naira you paid for, because it's giving you only 1 naira every year. Remember, mine is 20 naira with an earnings of 10. It's going to take me 2 years to get my money back. So it's the same logic you would apply in trading. You know, as an SME, buying and selling, you know, milk or Bonvita, that you also apply in the market. You need to understand the fundamentals. And through AfriInvest, you can get access to that rich depository of information about the markets, PE multiples, price to book value multiples. Now, when you've conquered that, then we then come and talk about technical issues. Like, yes, the shares are the P's are low, but there is market demand. Simply, if people are buying one item more than the other, the price of that item is going to go up, right or wrong, you see? So technical issues can also affect the actual price of that stock. So, and similarly, other macro issues, we talked about the economy, we talked about the risks in Nigeria economy. If the issues around Nigeria economy starts to look negative, then even the whole stock exchange will kind of cool off a little bit.
Right. So I guess as an investor, it's not just getting on the app and buying anything you see. There's so much that goes into you know, investing. Thank you so much for helping us, you know, break this down. I've been talking to Mr. Ike Chioke, the Group Managing Director, AfriInvest West Africa. Thank you so much. Ladi. We'll see if we have another stellar year.
I'm looking forward to it. I think that the outlook is constructively positive. Given the election issues and given the geopolitical tension, we still are positive about the market. Our outlook is on a base case scenario for the market to do a 40% appreciation this year. That means taking us 140 trillion naira market size.
Incredible.
Yeah?
Fantastic.
If it's an upside case, you could be looking at up to 80% or even doubling to 200 trillion. So
okay,
let's keep our fingers crossed.
Thank you so much.
It's a pleasure.
Thank you, sir. All right, we'll take a break now. When we come back, we get a sense of, what's playing out in the cinema market. That's in a moment. Just stay with us. All right, we'll see for the cinemas now, the West Africa, that's the markets in West Africa, that's the 2025 box office scorecard. We see that's out at this point, and we see good money, being made there, about 15.6 billion in gross revenue, and now that's a historic shift, at this point where we're seeing Nollywood actually matching up, when it comes to revenue. And but behind the record-breaking numbers lies a complex business stories. We're seeing cinema tickets. I don't know if you bought cinema tickets recently, and they cost between 5,000 to about 6,000 naira at this point. But let's gauge the business so far. Joining me for this conversation, we have Okwe Ajayi, the CEO Cinemax, and convener Lagos Business of Film Summit. Joining me right here in the studio. It's great to have you. Good morning.
Morning. Great to be here.
Yeah, Happy New Year.
Same to you.
So it seems, obviously, I don't know if Dirty December trickles into the cinemas.
It does.
It does, right? Okay, yeah, so we're seeing gains there. But with those gains, we're seeing ticket prices, going up, at this point. I remember there was a time I could buy a ticket for about 1.5, 2K, but that's changed, at this point.
I mean, the business is affected by same factors that affect every other business. So costs have gone up. So naturally, cinema tickets will go up. Average is about 5,000 thereabouts. So there are cinemas that tickets are still as low as 2,000 to 5, while some as high as 10,000, depending on location, depending on, sometimes blockbuster pricing. Prices are generally higher over the December period anyway. So.
Right. So, looking at, the revenue so far in 2025, about 15.6 billion. At this point, who's making the money?
Well, so the money typically should go around. The producers, the exhibitors, distributors, right? And that is box office only. But yeah, there's December is a big period. Funke Akindele is probably getting close to 2.5 billion in box office. That's the highest we've ever seen. Her movie Behind the Scenes, Tony Abraham, is nearing 1 billion. So there's been quite some strong numbers. Ginger did 500 million in the middle of the year as well. And obviously, he also had Hollywood films like, what's the name of the film?
So many movies.
There's a strong Hollywood movie, I can't remember the name, did about 700 million sometime in April as well. So yeah, it's been quite an interesting year.
Right, and talking about Hollywood, Nollywood at this time, normally it was, Hollywood movies would, get the chunk, of the market at this point. But it seems...
No, it's changed for
Nollywood is matching up.
Yeah, Nollywood has been matching up the last 3-4 years. It's been quite strong from Nollywood. Nollywood, you can even argue, has been the source of the growth over the last 3 to 4 years. Particularly post-COVID, Nollywood has come off quite strong, and that's a trend that is expected to continue for the next few years.
Right, and
till further notice.
And there's also a trend, right now. I'm seeing a lot of movies on YouTube, and I'm wondering, some say, okay, some of these movies should be in the cinema or not be in the cinema. Is that competition?
Well, I don't know that that's direct competition. I think YouTube has its market. I think that it's a strong market. And I think that there's nothing wrong with putting great quality films on YouTube. Because there's no barrier to entry, literally anything can be on YouTube. But there are very good movies on YouTube. And there's an entire economy on YouTube that is driving, a lot of growth in the industry.
So I'm wondering if I'm a producer at this point. I'm trying to figure out where to take my movie to, cinema, YouTube. Where am I getting more money?
So it depends. It depends, and from the beginning you have to have a strategy on what you want to do. If you're taking a film to YouTube, the way you position it, the way you market it, even your casting, all of that makes a big difference. Films going to cinema usually require a lot more marketing, a lot more positioning, a lot more branding, bigger premieres. It's more of an event, right? So it's a bit different. They're all films, but the approach and the strategy is different.
All right, so looking at the revenue, all-time high, but we're just seeing 2.79 million admissions. So seems not matching up. Looking at West Africa.
Yes. So admissions are still not as great for a country the size of Nigeria. There's a lot that we can do, and while we continue to celebrate the growth in the industry, there's a lot more. 2.7 million admissions is not a lot for a country as big as this. Even for a state like Lagos State alone, it's not. I mean, it's not a lot, right? However, there's also still a bit of the overhang from COVID because we're near 5 million admissions pre-COVID. And this is not a Nigerian issue, this is a global issue. But I think that we're entering a phase of significant growth as well, both from people from an entirely new market who's adopting the cinema culture all over again, to people who had stopped going to cinemas coming back, to Nollywood driving admissions to cinemas, right? So there's huge potential. And I think last year was the first time I started seeing growth in both admissions and box office, right? And that has continued this year.
Right, and looking at some of these movies, definitely it costs a buck to make a movie at this point. We keep talking about credits, cost of credits.
Yeah.
Definitely, if you're going to the banks, you're going to pay a lot, to get money there. Where's funding coming from nowadays?
I mean, there's a lot of funding is coming from private individuals, angel investing, but more and more structured investing is coming to the sector. Creative Catalyst financed the film that we did, co-financed the film that we did last year. It's Chapel Hill Denham. I know MBO Capital. I know a few banks are also now funding. So there's a lot more interest generally in the sector. And funding is not only for movies, it's across the value chain, infrastructure, distribution, and so on and so forth. So there's more interest in the sector because I think more and more people realize that there's a huge potential. Right, and so banks are now getting more interested.
Right, and I'm sure there's investors sitting on the sideline and wondering, how do I get into this industry? Where do I put the money? How do I what do I stand to gain? At this point, what are you guys doing to educate investors?
I mean, so we're doing a summit. That's one of the reasons we're doing a summit. There's a knowledge gap in the industry. We have a summit on 30th of January, Lagos Business of Film Summit, which is in Ikoyi. And one of the main things is also to provide more information about the industry, right? So they're going to be financiers, producers, distributors, investors, and the entire value chain, right? The whole point is we need to have conversations about how to scale the industry. We're growing about 30% a year, which is great, right? But we know that for a country the size of Nigeria, doing $10 million in box office is great, but compare that to India that does over $1 billion in box office, right? And even though India is bigger than us, 6 times bigger than the population, but there's a huge potential to scale this industry at a much faster rate. I mean, we should be talking $400–500 million over the next 5 years as an industry. That's what we think the potential is. Driven by a number of things. Number one is also the population, median population of 18. So in another 5–10 years, that age group will be 23, 28. They're in the work market. They can't be producing. They're consuming content. So we have everything required to scale the industry at a rate that we've never seen before.
Right, but at this point, what are we making? What are investors making at this point in the industry?
I mean, it's a bit mixed. It's a bit mixed.
50%?
There are people who've
100%?
There are people who've done 3 times, 4 times their money. There are people who've lost their money as well. Right? There are people who are waiting for an opening, maybe from streaming platforms. So it's a bit mixed. You can't really say that it's a one size thing. People have had different experiences, and because our business is also a creative business, right? Sometimes it's also subject to a bit of perception, right? It's a bit difficult to be able to sometimes say exactly what the outcome will be.
Right. So definitely quite heartbreaking when you spend so much money and nobody wants to see your movie.
Well, it is, but it's also very rewarding when people finally see it and they love it.
And they love it. Your movie is trending everywhere.
It's very rewarding. Yeah.
Right, quite incredible. We'll keep tracking this industry. Thank you so much for coming on. Kwe Ajayi, CEO, Cinemax, convener, Lagos Business of Film Summit. Thank you so much for coming on today.
Thank you very much.
All right, we'll head on to the global space now. We'll see what's playing out there. All right, let's get a check now on the global space. Now we see ARK Invest. They bought a combined 40,067 shares of Intelia, acquiring 33,990 shares via its ARK ETF and 6,077 shares through ARKG for a total value of $457,000. The purchase extends ARK's recent accumulation of Intelia shares. That was on Monday, January 12th. The firm added 99,000 shares following an even larger acquisition of 216,411 shares earlier last week. Yeah, definitely would like to follow the big investors and where they're, stashing cash at this point. I would say the U.S. government have issued an urgent advisory for American citizens to leave Iran immediately, according to a notice published yesterday by the U.S. Virtual Embassy in Tehran. U.S. President Donald Trump has voiced his support for Iranians on the streets, threatening action against Iran if killings of protesters continue. Trump also maintained, ambiguous language when asked about potential military involvement, not ruling the scenario out. Meanwhile, President Trump outlined plans to tighten immigration enforcement and combat fraud. During a speech at Detroit Economy Club, he said his administration would issue 90-day notices to states such as California, demanding the return of individuals who enter the country illegally. Trump also claimed that beginning February 1st, the federal government would halt payments to sanctuary cities to states that host them. And in Asia now, China's trade balance expanded broadly in line with expectations, driven mainly by robust exports as overseas demand for Chinese goods that stayed resilient despite, heightened geopolitical tensions. Government data released today shows China posted 114.1 billion trade surplus in December, slightly below forecasts of $114.3 billion, but higher than $111.68 billion surplus recorded in November. And shares of Japanese personal care products maker Mandem jumped to a 7-year high today after a U.S. private equity firm proposed a 3,100 yen per share tender offer, raising the stakes in the company's takeover battle. The higher bid intensified competition around the deal, sending Tokyo-listed Mandem shares up as much as 12%. That's it on the global space. All right, markets are open now at this point. Go get that trade and hopefully you make a profit. Thank you for watching Business Morning today. I'm Ladi Williams from the team right here at Channels HQ. Bye for now.